Financial irregularities in African soccer exposed by audit. The scale of financial wrongdoing across African football has been unearthed in a confidential audit of the continent's governing body that raises concerns about the legitimacy of millions of dollars of payments to executives and national associations. The Associated Press on Saturday obtained a copy of the private forensic review of the Confederation of African Football that was undertaken by financial services firm PwC last year when FIFA was effectively running the troubled body. The auditors had to grapple with limited documentation to account for payments at CEF worth millions of dollars that raised doubts about the nature of contracts, the need for family members of executives to receive payments, and raised the prospect of kickbacks and tax evasion attempts. The report, which is more than 50 pages long, covers the period 2015-19 and the presidencies of Issa Hayatou and successor Ahmed, who remains in power despite an ongoing ethics investigation that predates this audit. The lack of documents related to financial transactions before 2015 has already been highlighted as an area needing further investigation, according to separate recommendations from a joint FIFA-CEF task force in another document obtained by the AP. The group, which includes political and legal figures from across Africa, has urged due diligence checks on payments from FIFA and CEF to the 54 member associations on the continent. FIFA remitted $51 million to an Egyptian-based bank account from 2015 to 2018 as part of its forward program, according to the audit seen by the AP. By December 18, 2018, $24 million had been dispersed across the continent and $10 million of this, amounting to 40 payments, was reviewed and investigated. PwC found $4.6 million from 14 payments had no or insufficient supporting documentation to determine the beneficiary, purpose, and benefit for CEF. The auditors said they could not find the purpose of the payment, the ultimate beneficiary or evidence the cash had been received in some cases. Another $3.6 million accounting for 21 payments was considered unusual or deemed higher risk, the report said. Only 5 payments of those scrutinized, amounting to $1.6 million, had sufficient documentation and were said to have been used for the purpose intended. Based upon the procedures performed and documents reviewed, several red flags, potential elements of mismanagement and possible abuse of power were found in key areas of finance and operations of CEF, the PwC auditors said in the report. Given the serious nature of certain findings and red flags identified from the preliminary due diligence, we cannot rule out the possibility of potential irregularities. The large number of cash payments concerned PwC, which said they resulted in little or no audit trail to. For more on this story, visit the news article link.